Here today with Storm Roy from Cali. Excited to have you on, Storm. You've been crushing it with the digital mortgage leads, man, through Strong Point. Storm, kind of want to get how you doing today, first off.
Yeah, I'm doing great. How are you doing?
Good, man. Yeah, you've been crushing it.
Thank you.
Yeah, kind of tell us some of your secrets. What was it like kind of getting started with working the Strong Point leads? Like, what was your first, I guess, first couple weeks like? What were some ups and downs that kind of like that would maybe help new agents that are working these?
Sure. Yeah, so I kind of ended up getting sprung on these by necessity. I ended up having a BPL sale for like a his and hers that was like 5,000. AP that the second I let them know they were approved, wanted to cancel. I'll spare you the
Yeah.
details, but very frustrating. But in other words, I had a fat chargeback coming, but I had money.
Yeah.
And so I talked to you and some of the other people in our uplines, and you guys were suggesting strong points. So I threw the majority of that into Strongpoint. And Strongpoint, their pricing, the way that they do leads has kind of changed since I started. But
Yeah.
I basically threw the vast, at least half or more of what I had, at least like 2,500 into the first batch. And I think at the time that was like 50 or 100 leads, I forget. But
Yeah.
it was a decent amount to start with. And my mindset was, okay, well, I got chargebacks coming. I got to make this work. And I didn't have any. I think what helped me was I didn't have anybody saying I didn't hear any negative feedback about the leads at all. And so I just treated them like a lead and I was like, oh, this is great. These are high intent. They know exactly what this is. Here we go. And so I started doing really, really well. My production took off.
Yeah.
Um, so
What were
I
you
don't
doing
remember
kind of
the,
prior? Sorry. What were you doing
yeah.
kind of prior to getting Strong Point leads? What was your production and how did that like, what kind of shift did it make by starting to work with Strong Point leads?
Oh, a ton. So I was working with BPLs at that point,
Okay.
and those were I was starting to kind of gain a little rhythm with those. So I was starting to approach like, the um, 10 to 15 to more like AP a week production wise. And then with the when I started doing Strong Point, all of a sudden it went from like, okay, 5,000 was like an okay week for me. I'm like, okay, cool. And I may have still been part time at the time, as I forget. But once I started doing Strong Point, it's like, okay, I'm doubling that. I'm getting 10K weeks, 15K weeks. And I started just kind of blossoming in that respect and just having a lot of success with it just because I was very assumptive. I really tried to make it emotional and I just tried to keep it really conversational. And
Yeah.
then there's been some changes as far as, lead availability and different things like that. But what's really cool about StrongPoint now is the leads are coming in really fresh, they're really quick, they're good.
Hmm.
And I'm running them the pretty much the same way I ran them before. There's no big difference.
Love it. So you're getting them in. How are you kind of working them? Or I guess, sorry. So right from the get-go, it sounds like you kind of got off to a hot start with them. It wasn't a ton of learning curve.
Right. And I understand some agents are having a different experience with that. And I think one of the mindset things that had to kind of shift for what helped me with that was prior to the BPLs, I was coming from final expense, like aged year to two old internet final expense. And you have to dial your, what off in
Yeah.
order to get a hold of those people and sell those. It's doable, but um, I went from knowing that I had to dial a bunch and then doing some BPLs and then going into strong point and just continuing that amount of activity. And I think that's one of the things that helped me a lot. I did not treat these like these were BPLs where I can just call them one time at 8 o'clock in the morning. They're going to pick up. I'm going to set an appointment and then, close a decent amount of them. I treated it like final expense and just dialed and dialed and dialed. And I think that's one of the things that helped me a lot was that I put in that amount of activity from the start. And my expectations were, I'm just going to dial these a ton until they pick up.
Yeah. Love it.
Yeah.
So are you doing one call closes? Are you booking appointments? How are you kind of running your appointments?
Strong point, I way prefer one call close.
Okay.
Way prefer. There, the amount that's another expectation that's different between BPLs or something similar to where there's a much higher show rate versus strong point to where it's way more casual. You know, they Some people are better, but my show ratio is atrocious with setting appointments. I just closed an appointment right before this. That was an appointment, but they're retired. I was like, okay, I'll set an appointment with you. You'll be retired. You'll be home. That's cool. Majority of other people, no. One call close is the way to go. I try not to do one leggers. I try to have both people there. I will set an appointment if the spouse or somebody isn't there that needs to be there, but I'd rather just do it all in one go and one call close.
Love
And
it.
so part of the way of when I dial them is to match that. If I have a 40-year-old lead, regardless of their time zone, I'm going to try and call them after like 5 or 6 o'clock at night to try and one call close them when they get home from work and do it with their spouse and be done. If they're 70, I'm going to focus on dialing them in the morning because I know I can probably one call close them in the morning and kind of hustle and spread my time however I can.
Love it. So you're being real intentional about the ages and as far as when you call them, hey, this person's probably working, this person's probably retired, sitting at home, not doing a whole lot. Got it. Okay. So just being more intentional to make sure you're getting those people without having to book an appointment because you know that again, that person's 40, 50 years old, probably got a family, probably working. Makes sense. Okay, perfect. Um, and then what is your process to kind of work them? Are you calling them like triple dialing them, texting them? How much do you text? How often? Like, what does that kind of look like with trying to contact these leads?
Sure, I've tried a variation. What I do is I have a ringy. So I have a CRM where I have a bunch of phone numbers for people's area codes. So what I will personally do is I'll start calling them from a my ringy number that's in their area code for that state, and I'll typically try and triple dial them and try and get them to pick up. And if I do that, let's say, and I hit them up multiple times in a day. So if they're, in their 70s, I'll hit them up in the morning, I'll hit them up in the mid afternoon, and I'll try and hit them up at night again. And for working people, I'll try and hit them up in 5 o'clock and then around 6 or 7 o'clock later. I'll just try and get them on the phone. If they're not responding to that or it goes straight to voicemail, sometimes it does that because they have a phone setting where, especially if it's an iPhone,
Mhm.
unknown callers go straight to voicemail. So if they don't pick up, what I'll then do is I'll shoot them a text on my iPhone, my cell phone, saying, "Hey, this is Storm Roy. It's my phone number. It has my little picture and stuff on it. So I'll say, "Hey,
Yeah,
this is Storm Roy. I'm your mortgage protection guy, reaching out to you about it. Do you have time to talk?" I'll send that text. I'll wait 10 seconds and then I'll call. Because what I want to have happen is on their phone, they'll see a picture of me smiling and it'll say probably Storm Roy. And hopefully they'll pick up and be like, "Do I know this person? What's up?"
love
I
it.
don't I don't start with that because if I start with that and they don't pick up, they'll text back and set an appointment and they'll never and often won't show for it.
Sure. Okay. Love it. So getting them a call, getting them on the phone, and trying to obviously one call close them from there. So getting into the kind of the one call close, what is your kind of like, and if you mind doing a quick role play with me to kind of what that sounds like once you get them on the phone and kind of starting that process?
Sure, 100%. Sorry,
No, you're,
sorry, I had a. Can you hear that?
yeah,
Okay.
I can hear you. Yeah.
Okay, good, good. I had to adjust my Bluetooth. Right. So, just calling and then, hey, Mike.
Yep.
Hey, Mike. This is Storm Roy. I'm the manager assigned to you for the mortgage protection. I'm getting back to you and Katrina about that ad that you guys just saw online about coverage that pays off the home if you have a health event or a death. It's called mortgage protection. Is that ringing a bell?
Yeah.
Cool. So, super simple. Again, I'm Storm. My job's just to go over that coverage with you guys. Really straightforward, really simple. I know you weren't expecting my call, so if you need a second, that's okay. But
Hmm.
if you can throw me on speakerphone so you and your spouse can both hear me, I'm going to go ahead and go over that with you guys right now.
Okay. She's not here right now.
Okay, no worries. What we'll do then is we'll go ahead and set up an appointment for when both of you guys are home. It's pertinent. Both you guys need to know the info. It's state
Okay.
regulated too. So we'll set up a time, but just to give you a brief rundown, Mike, on how the process works, okay?
Okay.
All I do is I ask you guys a couple of questions about age and health. That's
Hmm.
what it's based off, like your eligibility. So a couple of questions about that. We work with all the carriers in the state that are allowed to do this. So we do the shopping around for you. Couple of minutes of questions. I'll go over some options with you guys, help you apply for the coverage, real straight to the point. Okay. Now, when tomorrow, is your spouse getting home? Sorry. So tomorrow, I'm looking at my schedule here. I'm pretty booked up the rest of the night. Tomorrow, are you and your spouse working? You guys have the day off?
Um, yeah, we'll both be off by 5.
Got it. Okay. So I want to make sure you guys get enough time to get home. I'll put you guys down for 6. Do me a courtesy, Mike. Just
Hmm.
give me a window between 6 and 6:30 to call in case I'm running a few minutes behind. If people ahead of you need a lot of help or have a lot of questions, I can't always help
Okay.
that. But I'm going to call you from this number right here between 6 and 6:30 tomorrow. Please let your spouse know too. That way we don't miss each other, have to do a reschedule and stuff. Okay?
Perfect. Okay. If you want to kind of pick it up, kind of where you started off, if I'm a single person with 2 kids,
Cool. Awesome. Yeah, Mike. So just so I know where to start with you, has anyone gone over this with you before? Mortgage protection?
no, never.
Okay, no worries. So what I'm going to go ahead and do is just explain the process. Again, real simple and straightforward. Long and short, mortgage protection, and you might remember this. This is something that used to come with a bunch of home loans. Like 9 out of 10 lenders would have this included in with a loan. You bought the house, they'd have the coverage in place. The reason they don't do it anymore, lenders screwed up in '08 during that big market crash. A bunch of lenders tanked. A lot of people lost their coverage and then their homes. So now the state runs it. It's run and regulated by the state. I'm with Family First Life. We're the ones who take care of this now. We work with about 30 different insurance companies, okay? There's about 30 different companies. They are life insurance companies. They have to be because it has a death benefit. We want it to be tax free for you guys, so Uncle Sam can't take a cut out of it. So they're through life insurance companies. Those are the only ones that are authorized to offer the mortgage protection in the state. What I'm going to go ahead and do is ask you a couple of questions about your age and your health so I can let you know what you're eligible for. A couple of questions about the mortgage and plan for the house so I can best help you. I'll show you some options and help you apply for the coverage. Here's the thing though, Mike, this really isn't something that we can kind of go out and buy no matter how much we want it or need it. We have to get approved by the insurance company. So it's between all the carriers, the pricing is the same. It's within 5-10 bucks difference. The big difference is what some companies accept for health and what others are not. My job is to find someone that says yes. Any questions on that so far?
No, it all makes sense so far.
Cool. Awesome. And then before I start the financial inventory, what I've been trying to start implementing is kind of a three-pronged question of basically why.
Hmm.
You know, let's start out with, all right, Mike. So in my experience, people will usually fill this out for a couple of different reasons. Like one, maybe this is just something you've been thinking about for a while and you just didn't know existed. Two, maybe you saw someone just pass away who didn't have this in place and didn't weren't able to keep their house, or they did and they were taken care of. Or, three, a lot of times people will have some health stuff come up and they'll realize, hey, I'm not mortal, I'm going to die eventually, and kind of start thinking about stuff. Which one of those or a couple of those do you kind of identify with? What kind of happened to make you fill out that ad online?
Yeah, just getting older, having more health issues is getting older, and I'm not going to get healthier as I get older, so just kind of coming to that realization, I guess.
Right, right, right. Things don't feel the same like they do now when we were 20,
Right.
right? So
Exactly.
100%. Okay. And then I'm noticing that your beneficiary is Cassandra. That's your daughter.
Yep.
What's your main goal with your daughter? Are you wanting her to like live in that house when you're gone? That's a family home. You want her to stay in it with the grandbabies, or are you thinking that she's gonna sell it and divide up the equity with her sister? What did you want them to do?
Yeah, she lives here with her 2 kids, so make sure she could stay in the home.
Understood. Got it. Goal is she's staying in the house. Okay.
Yeah.
Sounds good. So we're gonna start with the health start stuff, Mike. So I start with that first because then I can start prompting. So if I get an idea that you're 54 years old, you're healthy, or maybe back it up a little bit, maybe like 40s, you're healthy, you only owe like 100,000, 200,000 on the house. Okay, cool. I'm going to start prompting for IUL type stuff and living benefits. Kind of mention that as I go through the work coverage and everything else. So I start with health, um, then I do the mortgage, then I go to current coverage. And the way that I try and draw that out of them for current coverage, instead of saying, hey, what coverage you have? Why do you care? Why does it matter? I say, hey, this is going to save us some time, I think. Have you ever been approved for any kind of regular life insurance before, something outside of work?
Um, I had a policy I let lapse a few years ago. It was a
Okay,
policy, so yeah, it's been a while.
got it. Okay, understood. What did they approve you for? How much in coverage?
I think it was 250,000.
Okay, got it. Okay, understood. Do you have to remember what company that was through?
Th- Liberty, Liberty, life insurance.
Okay, got it. What happened with that? Was it just bills got tight, or do you just something changed with the banking, or what happened with that?
Yeah, just times got a little bit tough, and went through a divorce, so didn't need it at the time, I think.
I get you. Yeah. Things changed. Okay. Good
Yep.
news with a mortgage protection is we're actually going to meet with you every year. We do annual reviews. So if the coverage, what we're looking at today is just making sure we can find something in the budget that makes sense for today. If you ever need to adjust it, if you know, things got better and you wanted more coverage or bills got tight and you need to modify it down, cool. I'm the agent assigned to you. You just call me. We'll make sure we can do that to make sure it's not too expensive. And then I'll go over work coverage. I'll ask if they have short and long-term disability. For the financial part, the way I intro into that is I say, okay, Mike, the last thing I'm going to look at with you real quick is what it takes to run the house. I do that for two reasons. For one, it's regulated by the state. I'm not allowed to help you apply for something wildly beyond your means. Number two, about 80% of people that lose a home, it's not stupidity or job loss or bad money management. People get sick or hurt or they pass away. An example of that would be, last week I talked to a guy. His wife was diagnosed with colon cancer. She was given 3 months to live. She lasted 3 years. Even with good insurance, he spent 150,000 out of his savings to pay for her treatment. She still passed away, but he was able to spend some more time with her, right?
Hmm.
That's why people lose a home. Astronomical medical bills on top of no income and the mortgage. So I say all that to say, while you're young and healthy, you're doing good. Some stuff with life just changed, but your daughter's still in the house with the grandkids. I just want to get a brief rundown of what it takes to run the home. Make sure you're set up for success. Okay.
Okay.
Now, what do you do for work?
Sales.
Got it. I know that I'm sure that the monthly income can kind of fluctuate a little bit with that, but
Yeah, depending if we hit bonuses or not. I would say on average,
yeah.
I like 5 grand though.
Okay, about 5 grand. Then that's take home.
Yeah. Yep.
Okay. Do you have any overhead or marketing, or that's what you get paid, 5 grand a month?
Yeah, I'm a sales manager, so it can be as high as 10 grand, but on average, without bonuses, about 5,000.
Okay, got it. I keep reaching for my pen. I just have a pen up here. I keep reaching to write. Sorry. Okay, so 5 grand a month. You said the mortgage payment was 1,500 a month.
Yep.
Now, usually with people with kids, I know your daughter's grown up, you got some grandbabies, you probably help and buy stuff. Usually with younger kids in the house, it's usually about another 1,000 to 1,500 on top of the mortgage for your cost of living, everything.
Yep.
Groceries, Netflix, car note, all that. You're looking at with the mortgage, maybe like let's drop that down to 15, maybe like 3,000 a month to run the house. Does that sound ballpark? Kind of high, kind of low?
Yeah. Yeah. On average, I would say about
Got it.
3,000.
And how many months of savings, if it takes that much to run the house every month, how many months as of today do you have of emergency funds? 3 months, 6 months?
Between 5 to 6 months.
Got it. Okay. And last thing here, do you have anything that kind of acts like life insurance? Meaning, do you have anything that would help your daughter pay off that home or deal with property taxes or stuff like that when you're gone, like a 401k, an IRA, stocks, bonds, etc.?
Yeah. 401k.
Okay. Got it. Okay. Obviously, we don't want to have to touch that because eventually you probably don't want to be like a Walmart greeter at 80 years old or something, right? So we want to save that for retirement, but good, we do have a backup. Okay, got it. All right, so if I'm a newer agent at this point, I'd say, okay, I'm going to call my underwriter. And sometimes I did earlier. I called my upline Nick for my last appointment I sold, just because I wasn't sure about placement. But if I need to call my upline, I definitely will. And or when I get back, what I'll say is, um, okay, guys, what you can do for me is two quick things. One, go ahead and check and make sure you got that email I sent you earlier. I forgot to mention that that's something that I do. In the beginning, I mentioned it's regulated by the state. I'm required to send you all my info. It's
Mhm.
just an email. It has a carrier sheet, my state license, an ID badge, and stuff like that. That's just
Okay.
something I like doing. Some people text, some people don't, whatever you want to do. But I say, hey, two quick things. Make sure that you got the email I sent you. And then number two, if you can grab a pen or a piece of paper, notes app on your phone. I'm just pulling up some options for us right now. So let me know when you're ready. And then
Yep, ready.
go. Awesome. All right, Mike. So here's the deal. And let me know if I missed anything, okay?
Okay.
So you owe 200,000 on the house. You have 200,000 in equity in the home. That's a lot. Like I went over before, we want to make sure that goes to your daughter. That's essentially your life insurance. It's built into the house, okay?
Yep.
So we just want her to stay in the house with the grandbabies, have a family home. You're still healthy, you're doing good. Some stuff in your life changed. Income's okay. Here's what we're going to do. I'm going to go over how the options work first, and then I'm going to go ahead and go over the exact numbers. So, first off, the coverage is permanent. So, if you wanted to keep the coverage after you pay off the house and just leave something behind to your kid, to Cassandra and the grandkids, awesome, you can do that. If you wanted to just cash the policy out and get your money back plus some when you're done paying it off, you can do that too. I'll explain that in a second. It's going to cover you for a couple of different things. For one, it covers you for death. So if you just didn't make it home or didn't wake up tomorrow, they used to send a check directly to the lender. They don't anymore. It's better. They send a check directly to Cassandra. It's better because it's tax free and there's no strings attached. So if she needed it for property taxes, medical bills, debt, stuff for the grandkids, take time off work, go on a trip, whatever, she can. The priority, though, obviously, is the mortgage because
Mhm.
that's the biggest asset that you're leaving behind to her. It's going to cover you, though, while you're still alive because you mentioned that you're going to work until you're about 65, 67. So you got about another 15, 20 years to work. So between now and then, if you had a critical event that's like heart attack, stroke, cancer, ALS, kidney disease, anything that affects your internal organs, chronic, that's an illness or a condition lasting longer than 90 days. Can't work, you need help getting around, some stuff like that. Or terminal, that example of that lady I gave you earlier, you have a condition you're not expected to live from. You call me, we file the claim, they send you the check. And again, medical bills, whatever you need it for. House is priority though. The
Okay.
last thing that it does, Mike, is really cool. Like most insurance, like car insurance, you pay into it, you hope you don't have to use it, but you know you're not going to see the money again. This one's a little bit different. It's the way I like to break it down is it's kind of like a mini 401k. So the money you put into it every month, some of it goes into a savings, it builds with some interest. By about year 30, you're going to roughly have about time and a half, 125, 150% of what you put into the policy so far.
Okay.
You can pull out of it at any time. You don't have to be sick or hurt to pull from it. It's yours. But people will usually do one of two things at that point. Option A, they'll go ahead and get rid of the policy after they pay off the house, get your money back plus some. Two, they'll go ahead and keep the coverage, have it be permanent coverage. And if you wanted to use the cash value to pay those premiums for you, you could try and set that up as well so you don't have to make the payments. You got options. It's up to you. Okay.
Okay.
Any questions on that?
No, it makes sense.
Cool. All right. So option number one, I'm going to have you write down 250 and then 250,000 and then 100,000. Option two, 150, 150,000, 100,000. Option three, 100 or like 90, 70, something like that. 90, 70, like 100,000 or 80,000 or so, and then another 90,000. And I go through and explain, okay, first number is premium, middle is coverage amount, last is about cash value that you'd about have at the end of 30 years. And I kind of treat it like a CBO. So if you're newer and stuff, you know, you can look into that and get help with your mentor and stuff. That's just how I break it up. But it's the same thing you do if it's a CBO, where you just do premium times 12 at the end of 30 years. I kind of
Okay.
do something similar for IULs, right?
Gotcha.
Because they'll have the grid sheet and stuff. It's just a rough estimate just to give them an idea of, hey, you're going to have around this amount in there you can cash out. And
Okay.
but the important thing of that, what I'll explain real quick is For option number one, I'll try and do the whole house if they're young and healthy. Here's how much it is a month, whole house covered. So if something happens to you, you get sick, you pass away, no more house payment, you're good to go. Option two, it's a good chunk of the house. You or your daughter could refinance, get a lower payment, and stay there comfortably. Option three, starter one, cheaper. You can do a refinance, or at least you're going to have a couple of years worth of mortgage payments. So you can put that house on the market, have a couple of years to sell it in a good market, not take a loss, and she can get that 200,000 of equity out of the house. She's not going to have to race the bank after her dad dies to try and sell it in whatever market it is and worry about running out of time and money and the bank taking the equity. Okay.
Okay. Sounds good.
And I like doing that. I forgot who I heard that from, but
Yeah.
making each option do a specific thing.
Labeling it, right? Like kind of labeling each specific thing. This is what this is for. Love it. Okay.
Yeah, because then it kind of helps turn it away from just numbers. It's like, this is what this is actually for. This is what it's doing, you know?
100%. Yeah.
And I know that I'm trying to improve myself on making the sale more emotional, but I kind of try to more subtly, for now, I've been trying to kind of subtly throughout the whole process, make it more emotional. I don't have like a, you're screwed and your daughter's gonna lose the house moment for me.
Sure.
I try and be a little more casual and just bake it in through the whole process, ask enough questions to make it personal.
Love it.
But when I show the options, I ask them if you have any questions. If they don't, I say, okay. Now, again, it's not up to me to approve you, Mike. We'd have to apply, we'd have to see what they say. And again, we went through all the carriers. Pricing is all, it's all the same stuff. It's between $5-10 difference. So this carrier for your age and health is really good as far as getting you approved. Okay. But based on those options, something that would be comfortable for the budget today, wouldn't stress you out or put you guys on a ramen diet or something, but would be a good amount of coverage you think to start with for this first year for your daughter and you. Which one of those options would make the most sense for you?
I'm thinking the middle or lowest option for now.
Awesome. So what I would suggest is, why don't we start with the lowest option? Make sure if
Okay.
we can get you approved, because you'll get paperwork in the next couple of weeks in the mail by the state. You have 30 days to review all that, et cetera, et cetera. Let's start with the lowest one, make sure it's comfortable, because I know we had problems with that before.
Yeah.
Get you approved, and if you want to bump it up, just call me. Big deal.
Okay.
Do you want to go over, think about it?
Yeah. Yeah. Let me think about it.
Okay, no worries. So here's what I suggest. I do one of two ways. Sometimes I'll do one of two things. Sometimes I'll say, okay, well, let me ask you, Mike, when you say you want to think about it, is it, my experience is usually a couple of different things. Okay.
Mhm.
And information helps, not time. Is it more of like a price thing? Like you're not sure which one to pick, or is it more of like the coverage doesn't make sense to me? Like you don't, like I didn't explain the coverage good enough, or for you, like it doesn't make sense why this would help you or benefit you.
Um, yeah, just kind of like thinking of the price. Kind of want to look through my budget.
Oh, that's easy. Yeah, cool. So if the coverage makes sense, let's start with a low one. Because like maybe I forgot to mention, I'm gonna call you every year. I do
Hmm.
that to make sure you're still alive and kicking. Sometimes people get hurt or pass away and they don't tell us. That's part of why we do it. The other part is you can adjust the coverage as time goes on. Let's start with the lowest one and see if we can get you approved. If we do, we'll go ahead and bump it up later if you want to. Sound good?
Okay, sounds good.
And then the alternative that I do is I want to think about it. Okay, this is when I'm annoyed too. Or if I really, really know and believe they need the coverage and it's redonkulous. I'm like, okay, let me put it to you this way, Mike. If the coverage makes sense and you're just not sure which option it is that you want to apply for, let's start with that lowest option, see if we can get you approved. If you want to bump it up, just call me. That's no big deal. That's easy.
Hmm.
If the coverage itself doesn't make sense to you, no explanation needed, don't apply for the coverage. Just decline it because I don't want to have to chase you around for the next couple of weeks trying to figure out what you want to do. So if the coverage makes sense, I'm happy to help you apply for it and see if we can get you something approved. But if it doesn't make sense, just go ahead and decline it. That's if I'm like irritated. That's if like I know they need the coverage and they're just being wonky or weird, or I don't think they're telling the truth about their health or something like that.
Cool.
And I'm trying more treating it like Ryan, where it's like, no, we're not going to think about it, dude. We're going to do this or not.
Yeah, love it.
The only exception to that is if I'm showing them like an option for like, and they can afford it, like 400, 300, 200 a month, those are the options.
Yeah.
And they're like down, but they're like, no, 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 this all makes sense. This is good. And I try and do a small attempt at like, hey, do you want to start with a low one? We can go from there. And no, 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 this all makes sense. This is cool. I just need like a day or two to think about it. Okay. I'd rather not push through a $400 chargeback. Okay, sounds good. I can
Yeah.
give you a call tomorrow at this same time. Do you need any more information from me? Do you have any questions about the coverage or how any of this works? They'll usually say no. I'll call them tomorrow. If they don't answer, they're usually dead to me unless I'm desperate.
Yeah.
Um, and if they, because I've sold those before.
100%. Yeah. Just give a night to
So
on it and then they pick a decision, talk about it. Yeah.
yeah, so I think it's mostly like a case by case basis. I try not to have them think about it. There's occasional exceptions. Um, but if telling people from the beginning apply or decline helps you in the beginning to do that, I think that's totally cool and good. I know that there's a lot of people who do that. I know that it works and it's effective. And when I've tried it before, it does give me a sense of like, no, we're doing this, bro.
Yeah.
But that's just personally how I handle it. So
Awesome. Well, yeah, that was really good. I think that's really beneficial. Anything else you would think that'd be beneficial for new agents working these? Kind of the mindset maybe behind it or something.
yeah, so was something that Travis helped me out with the other day, actually. Travis is a G. I love Travis.
Yeah.
Is he mentioned that when you ask people like basically are you screwed? Okay, so let me and I try and do that with that recap. I go through the financial inventory and I'll usually have some kind of recap where I kind of go, okay, so you don't have this, but okay, I see why you're doing this. Because you make all the money, Mike. If you die, your daughter's taking care of both those kids. She's working part-time. She's not going to be able to stay in that house. Okay,
Yeah.
I gotcha. Sometimes people will be defensive just naturally and try and say, well, no, I have the life insurance. And it doesn't make sense. It's just a pride thing. So what Travis said is like 90% of people, when you ask them that, you just got to ask it a different way. Okay, yeah, no, no, you did good. You already got the life insurance set up. You got it 20 years ago. Cool, keep that sucker. You're never gonna find something cheaper. But this is gonna be something specific. But do we have anything specifically for like the house to make sure if something happened to you?
Love
And
it.
just kind of try and ask more questions and break that down and just not just take a one-off thoughtless response of no, they'll be fine as the end all. And if they are fine and they make buku money and I'm like struggling trying to figure out why on earth they need this and trying to pull out a why, I do like Travis does. I just compliment them and show them options. Some people just want it. Some people are weighing are they it makes sense and they are willing to pay $200-300 a month for a coverage because they just like the peace of mind and they want it.
Yeah.
So if they're making 8K each a month, the mortgage is only 2,000 a month. I'm not going to try and break their arm and convince them they're screwed. I can't.
Yeah.
So so I just
Love
say,
it.
okay, you guys have done really good. Here's some options for you. Which one do you want? Try
Yeah.
and downsell, you know? So
Love
I
it.
think real quick, I think that just being willing to ask more questions, being willing to put in the work for dialing, reaching out to your mentor, and then um, just knowing that even though these are really high intent leads, you're only looking for a percentage. Some
Hmm.
of them are going to lie about their health. Some of them are going to be wrong numbers. Some of them are just going to never do anything ever. Some of them have life insurance and want to try and find something cheaper, whatever. So all I'm really looking for, if I have a batch of 50, if I can close five of those things, and they're usually 1,000 to 1,500 a piece at least, you know, I've gone ahead and 4 to 5 times my money. I'm good.
Love it.
So
Yeah.
so so try not to get frustrated and be like, oh yeah, they're gonna answer and I'm gonna sell them and it's gonna be good and it's just like a BPL. It's different. And then the one last thing before I forget is with BPLs, I like to be a little more assertive and assumptive and like this is why I'm doing this. This is the process and da 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 da. With strong points, I try and be a little more casual and low key. I'll say stuff like the lenders tanked, they went out of business, they sucked.
Yeah.
You know, if they'll use little swear words, sometimes I'll use little swear words or whatever. I'll kind of keep it casual because otherwise they seem to get more weirded out because
Good.
I'm pretending to have authority I don't. They know that they can buy this or not.
Yeah. Love it.
you know?
Awesome. Well, that was all gold. I think that's going to be huge for new agents coming on to kind of follow your steps that you're doing. And I appreciate you jumping on today.
Yeah, man. And if any new agents need help, they can feel free to reach out to me. I know Travis is doing really good. I know that there's a lot of people that you can reach out to help. So please don't just flounder and feel stupid, but reach out for help because we can help you.
Okay, how can they contact you, Storm, if they're looking for help?
They can call me 714-515-0207. You can just call or text me, and I'm busy like all of us, but I will get back to you within the day usually, especially if I know it's a newer agent and like, hey, they're in the home or something. And then while you're on live dials too, I'm trying to get more on those. So if I'm on live dials and you can call, text me or talk to me or chat with me on there.
Awesome. Well, appreciate you jumping on today, man, and keep crushing it.
Hey, thanks, man. Appreciate you. Thanks so much.